Welcome to The Explainer. So today, we are taking the often intimidating world of technical trading and, well, we're transforming it into a highly practical survival guide. You've probably heard of the Relative Strength Index before, but today, we aren't just going to define it, we're going to master it and use it to build a complete mechanical trading system that actually works. Picture this for a second. You're driving down the highway, but you're completely blind to your fuel gauge. You might cruise comfortably for miles until, out of nowhere, the engine just dies. Well, trading purely on price action, or, even worse, on your emotions, it's exactly the same thing. Enter the RSI. Created by J. Wells Wilder Jr. back in 1978, this is our objective solution. Honestly, whether you're trading from a bustling market in Lagos, a dorm room in Accra, or a high-rise desk in London, the RSI is your universal fuel gauge. It helps you time those tricky entries and exits by revealing the actual raw strength behind the price movements jumping around on your screen.
Okay, here's our roadmap for today. We'll start with the market's fuel gauge, look at how RSI works, bust some overbought myths, spot hidden reversals, build your RSI strategy, and finally, cover risk and survival. Let's dive right in.
Part 1. The market's fuel gauge.
Think about watching a football match. You look up, and the scoreboard says Team A is winning 2-0. But if you check the underlying stats, they tell a totally different story. Team B has 70% possession and 15 shots on goal. The scoreboard is giving you one reality, but the stats? They show Team B is absolutely dominating the momentum. In trading, price is just that scoreboard. The RSI answers the far more crucial question beneath the surface. Who is actually stronger right now, the buyers or the sellers? Moving on to part 2, how the RSI actually works.
So the RSI operates on a simple 0 to 100 scale. It's essentially a market thermometer. Using the standard 14-period setting, it calculates your average gains versus your average losses over the last 14 hours, days, or whatever time frame you happen to be trading. When that line moves above 50, buyers are gaining control. Pushing up towards 70 or 100, the market is heating up and might be getting overbought. Drop below 50, sellers take over, and heading down towards 0 means the market is freezing cold and maybe oversold.
Section 3. Overbought and oversold myths. Let's clear this up right now. Look, overbought really just means the price rose quickly, and oversold simply means it dropped quickly. You have to think of these zones like highly stretched rubber bands. They are warning signs of exhaustion. They are absolutely not guaranteed reversals.
In fact, the golden rule here is overbought does not always mean sell, and oversold does not automatically mean buy. Take Chioma, a crypto investor in Abuja we learned about in the source material. She saw Ethereum's RSI tank to 27, deep into that oversold zone. But instead of blindly trying to catch a falling knife, she just waited. The very next day, the RSI crossed back above 30, a solid bullish candle formed, and trading volume spiked. You've got to treat the RSI as a yellow traffic light urging caution, not a green light to just slam on the gas.
All right, part 4, spotting hidden market reversals. Now this is where it gets really fun. This brings us to divergence, which is what happens when the price and the RSI start telling you completely different stories. During bullish divergence, the price is falling, hitting lower lows, but the RSI momentum is actually making higher lows. The selling pressure is drying up. It's kind of like a car rolling forward, but the engine is dying. Bearish divergence is the exact opposite. Price is going up, but the buying momentum is quietly dropping off. These hidden disagreements are massive signals for potential market reversals. But remember, you always have to wait for price confirmation before you act.
Section 5. Building your actual RSI strategy. Here's the thing. You can never use the RSI all by itself. It's a recipe for disaster. First, identify the broader trend, maybe using a moving average. Second, check your RSI for momentum resets near the 30 or 70 lines. Third, demand actual price confirmation at key support or resistance levels. And finally, lock in your risk with strict stop losses and take profits. What we're doing here is fusing raw momentum data with solid, undeniable market structure.
Before you execute any trade, you need to run through a strict checklist. It's exactly what Tunde, a trader in Lagos, did. He was watching Bitcoin rocketing upward and felt that heavy, familiar pull of FOMO. But his checklist showed an overheating RSI sitting at 82. So he held back. He just waited. Eventually, the price pulled back, the momentum reset, and he entered at a vastly better level. That kind of discipline literally pays off.
Which leads us to part 6, risk management and survival.
Listen, it is so easy to fall into the classic beginner traps, treating the RSI like some perfect crystal ball, trading against a super strong trend, jumping at every tiny wiggle on the chart, and worst of all, entering without any risk control whatsoever. A great indicator is completely useless if you make these errors. Because let's face it, you can't predict the market perfectly. You can only manage the imperfect outcomes.
1 to 2%. If you remember nothing else, remember this number. It's the ultimate golden rule of professional trading. You should never ever risk more than 1 to 2% of your total capital on a single trade. If your account has 100,000 Naira, your maximum risk on a single trade is 1,000 to 2,000 Naira. Period. This precise math is what ensures you can survive a streak of bad trades and still stay in the game to trade tomorrow.
And you combine that 1% rule with a hard, strict stop loss, it automatically takes you out of bad trades, acting as a non-negotiable safety net to guarantee your losses stay small and fully controlled. If a trade hits your stop loss, guess what? The system worked. You survived.
At the end of the day, the market does not reward speed. It rewards discipline, patience, and survival. The RSI is a phenomenal dashboard, but the tool itself doesn't make you profitable. Your unshakable discipline does.
So the next time you pull up a financial chart, I want you to ask yourself a serious question. Are you going to keep trading on blind emotion, letting fear and greed hijack your decisions? Or are you ready to take control, read the true momentum, and use your new fuel gauge to safely navigate the markets? The choice is entirely yours. Thanks so much for joining me on this explainer, and happy navigating.